Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, welcome back. Phil Tarrant, host of the Smart Property Investment Show, for our special series, Fast 50 2026, where to put your money today for the best capital growth in 2026. Third consecutive year of this report. This is the third installment of our special series. You're tuning into this across YouTube, the streaming platforms, and also across all the different podcast players. Please, quick favour for me, and I'll always get in trouble from our production team here, is I never ever ask for reviews. So they've told me to tell you to give us 5 stars because what we're doing is so brilliant. But importantly, they asked for some commentary around it. So a bit of sort of jest there for me. But if you like what we're doing, please keep those reviews coming. They do matter. I get the great privilege of sitting behind a microphone and a camera talking with Australia's property investors, but the real heavy lifting is done by a very talented team here. So they get a real kick out of seeing the good work that they're doing, getting acknowledged by tens of thousands of investors who are out there making decisions on the commentary and the narrative that we're providing around property investment. And that's very much at the heart of the Fast 50 report, which we release in conjunction with our good friends and our partner of this report for the last 3 years, Pure Property Investment. Joining me back in the studio as we try and unpack what's going on, specifically this installment of the podcast. Queensland, Paul Glossop, welcome back.
Thank you, Philip. Good friend. That's very kind of you.
I wouldn't say you. I was talking about your very talented team.
Oh, fair enough.
You.
I thought that
you.
might be a little bit too kind.
No.
No, thanks for having me back.
Oh, you're welcome.
It's a bit begrudging, but anyway, I'm here.
Well, you know, we are desperate here at the Smart Property Investment.
Desperate puffer jackets.
But Paul's one of 14 of the experts that we turn to for this year's report to try and assess those markets which are going to be performing the best for capital growth over the coming year. But we don't look at this only in isolation, Paul, for a year. It's not like get a year of growth and that's it. A lot of these properties in these locations, should be providing a sense for long-term fundamentals that should shape a positive outlook and a positive outcome for property investors.
Massively, and hence why I think as big part of the data cohort, when anyone is going to go to smartpropertyinvestment.com to download .au, sorry, I'm too used to my side being...
We're not America, mate.
Well, purepropertyinvestment.com is just essentially .com because we don't need to compete with other people. So we do have clients in America, believe it or not. I'm sure you have some viewers in America.
Mate, heaps of viewers.
Well, exactly.
Mate, we have heaps of viewers in the UK.
Don't discriminate, Philip.
In Europe, in Canada, in the US of A, and right across Asia, including the Middle East.
Well, I'm glad. Good for you.
Yes.
Okay, so going back, now I've completely lost my train of thought. Move on. I've lost it.
He's lost
it. I had somewhere I was going.
This is the efficacy of finding a good buyer's agent. You want to find one which is confident around data, but also understands, appreciates narrative. But the point I have for you, Paul, and we often get feedback on smart property investment, and maybe this is sort of something I can improve, and I'm happy to be self-reflective, is that because I've been doing this for some time, I just sometimes forget that there is a layer of assumed knowledge that maybe most people don't have. So I may brush over sometimes quite complicated terms and some sophisticated strategies, which may have a lot of our listeners sitting there scratching their head going, what's this bloke talking about? So, but on the flip side of that, a lot of the feedback that we get, particularly on those review channels, is a lot of our listeners actually like the way that I can actually break down, when I do it, quite complicated scenarios and strategies into a way in which it's democratized that most people can understand. And that's the only way I can do things. So I'm not the brightest bloke out there, but I try and simplify things. And if anything in property investment is complicated or hard, or you don't understand it, or it doesn't smell right or isn't right, it's probably a good case it is. So property should be simple.
And if it's not, you shouldn't be buying it.
Yeah.
It really, put simply that way, I think if you're prepared to put pen to paper on something that you don't understand, particularly in the property space, which will likely be the largest investment you've ever made or will ever make, I'd probably say push pause and make sure you've got all of the information and everything aligned mentally and also physically to be able to exercise the purchase and know what's going to happen after you sign that document.
Yeah. Ask questions, and if your advisors are vague or deliberately vague in that regards and give you sort of quite blanket answers or don't give you the detail, I'd interrogate that and I'd ask cascading questions to ensure that you're getting the results that you want. And that said, it's great to use advisors to help you on your property journey. Pure Property Investment, for example, may be one that you would choose to use, but just don't assume that what they're telling you is accurate for you. You are responsible for your property investment decision makings. Use the right advisors to help shape your decision making. And every good property buyer I know will tell you they want their investors to be informed. They just don't want to go, I don't know, you just tell me what to do and I'll just go and do it. You don't like that, do you, Paul?
No, not at all. I mean, our job is to...
You want to be interrogated.
Yeah, we absolutely do. And if the biggest thing that I always, after our first initial call that I will have with a client, my position is I want to provide a very detailed strategy and summary of what we discussed and what the next steps will be. However, the biggest thing I emphasize out of that is I'm going to provide you with a fair bit of information here, both including your position, what the investment strategy should and could look like, and then what we should be buying. And I actually give away everything that we should be doing: suburbs, property types, locations, everything about the macro, micro data, etc. And then also walk through exactly what our process includes and what they need to do next. Now, that's can be a multiple page document that I provide after that meeting. The best advice I can give anyone is that does go through that with me is that please give me a call back or send me an email as and when there are any questions before you do anything. Yeah. Because the last thing I want someone to do is saying, sure, let's go, and then think, I actually don't even know what the next steps are. I want to make sure people are clear. Do they have their finance ready? And if it's not ready, are we confident that it's going to get ready in the process of buying? Do they know the process of who and what's going to be on the ownership documentation? So is it going to be joint tenants, tenants in common, a trust structure, SMSF? Do they have their bare trust established? Are the funds rolled over from their SMSF? There is so many different things that we want to make sure we get right before we actually even get started, because they're the last things that we want to be happening essentially on the fly, because they are very important decisions that you can't undo once those decisions are made. So there's a whole bunch of that preamble before you even bother talking about the property, and that doesn't even get into what happens after you've signed a document to buy a property. And
property in some ways can also be a bit of a blood sport, right? You've got to expect to have disappointments and frustrations along the way.
Similar to Jean-Claude Van Damme.
Yeah, absolutely. But it could be tough, right? Like you got to strap in and expect a tough, particularly if you're new to property. If you've been around property a bit, you just expect that as part of the game, right? But if you're new to it, it can be daunting. It can be stressful. It can be so absorbing of every single waking moment that you have, and simple things like understanding your obligations when you're buying property, whether you're buying at auction. Like people still get thrown when they go, I've won at auction. What you want a deposit now? No, I need some time to get some money to
shares.
Get that.
I need to sell that Bitcoin.
That ain't how it works, right? Like it's the way it is. So it can be confusing. So rely on your advisors to give you those insights. There's also really good platforms like Smart Property Investment, which has got all the information in there. But there's still going to be other stuff that you just don't know. Unknown unknowns. Go out there, ask the right questions, you'll get the right answers. But we're here to talk about Queensland, Paul, which again has performed solidly in the Fast 50 report. Third year in a row, strong representation, pretty consistent. 15 suburbs out of the 50 in Queensland this time around. However, what I would say, though, is that I'm starting to see some trends that a lot more regional locations over the metropolitan locations are creeping in. Of the 15 suburbs, 9 are in regional locations. Discuss.
The trend is your friend, as the saying goes. and sometimes it can be your foe also. That's what I want people to try and think of here, is that just because there's more emphasis on regional markets in Queensland, don't think that that's an indication for you to go bush straight away. It's the regional market in Australia and particularly in Queensland between 2010, let's go with, and probably 2020 was a barren wasteland, if I was to put it lightly, from a property growth standpoint. Okay. And anyone can go through the archives and look at where growth came and didn't come. I can almost guarantee that outside of a couple of random mining hotspots that probably had a mine open up and something was discovered and something happened in a short period of time.
You're talking about regional Queensland.
I'm talking about regional Queensland here. Yeah. The vast majority...
5 years ago.
No, between 2010 and 2020. Okay. So that decade there. That market did extremely little. And that was across the board. That wasn't just one market. So be careful. is what I should say. And this goes back to when it did a deep dive on the previous episode on WA, is just because it boomed in the last 2 or 3, 4 years, just take a bit more of a 30,000 foot view and just think, am I prepared to hold this property in this market for another 5, 10, 15 years? Now, the downside, if we want to keep staying on that theme before we start talking about upside, is in good times, regional markets trade well, they're buoyant, there's a good buzz around town, there's plenty of money, there's plenty of demand, there's little property, hence why property prices increase, vacancy rates are down, rental growth comes, all those things which you want to see if you're a property investor. The downside is, as and when those markets turn, typically with the economy and with essentially less people in those markets, or people who are there have less money to spend, it typically means you've got a smaller cohort of people who are going to spend money on property. And if you've got, going up to that theme, if you've got to the point where you've got a small amount of property in a smaller market, it doesn't take as much for a market to lose its steam. So it can move up and down far quicker than major metro markets, because there's simply less people to move that market, whether it's a good or a bad movement that it's going to have. Now, that's the biggest theme that I would suggest is something that people need to be aware of from a Queensland regional market perspective, which is probably a little bit different than the major metro, sort of say Brisbane and Southeast Queensland corridor.
So what I would say here, Paul, and for those of you to get a sense for the methodologies, go back and tune into episode 1 of this special series where we give a sense to it. But essentially, we've gone out to a whole bunch of experts right across property investment in Australia and said, where would you be putting your money today for best capital growth in 2026? And then we curate all that and put it together. I'm looking at the experts who have identified these areas which are represented here in Queensland, and I don't see your name or anyone from Pure Property have made a recommendation here on these suburbs in Queensland.
You'd be right.
Yeah. Which it goes to what you were just saying.
It does go to what we're saying. And it's not to say that we've never bought, or I can, my mind actually, I was on the phone to my auntie this morning on the way into this studio, believe it or not, who lives in Gin. And
that sounds like it's far away from
it's
anywhere.
Not close to much. Well, it's about a 50-minute punt from Bundaberg.
Okay.
And the reason why I sort of bring this up is that it just reminded me that there was a very short period of time that was around about 20, scratching the archive mentals, but about 2019, 2020, where we saw an inflection point, a very quick inflection point, where there was some really, really good value in a couple of markets that we had clients who had very limited budgets. Now, we've bought in regional markets in Queensland, but not much and not for many people and not for a long period of time.
Yeah.
And I guess what it reiterated to me then, because she loves talking about both the rain and what's in the rain gauge, and then also the Bundaberg property market. That's all she talks about, which is great. Yeah, that's what floats a boat, and that's what I guess motivates the most people in small regional towns. But it did remind me that Bundaberg's doing, or has done, really well over the last 2, 3, 4, 5 years from a growth standpoint. It had some big floods about 10 years ago, and that impacted it, and a whole bunch of other things that happened, sort of similar to what happened with a lot of the regional towns where it was very flat for a good 10 years. But we bought a number of properties in that 2018, 2019 time, 700, 800, 900 square metre, 3-bedroom, brick, and also some fibre homes under $200,000. We had a period of time for about 18 months where we probably bought 24 properties in Bundaberg, I can recall, that were in that same price point. Those same properties are trading around 500 to 600K now. Fantastic.
Right place, right time.
However, you start to see where that price correlated. At that time, $150,000, $180,000 for a house in Bundaberg, dirt cheap, yes. Hadn't moved for a long time prior, granted, but the same house in, let's say, other markets that are associated with Southeast Queensland was more than double at the same time. So it was a big price disparity. That price disparity this day and age doesn't actually exist the same way. So if someone was looking for just pure affordability and wanted to go regional because they wanted to get an affordable home and maybe go take a completely a career change and everything else goes with it, just to have less pressure on their mortgage stress. Let's just think about owner-occupiers. The biggest challenge I find right now in regional Queensland, but also a number of other regional centres across Australia, is that they don't have that choice anymore to go bush and go a simpler life, a smaller mortgage, and all those things that used to come with it. that actual choice doesn't exist the same way it did. And it will happen again, but I think that the markets have to adjust before those price disparities come in. And that's probably a big reason why our perception is that we don't see the value in the short to medium term in those markets like we have in the past.
And that gives our listeners and viewers a sense for how different buyers, agents or property strategists are wired. Just because Paul isn't recommending Queensland doesn't mean that Queensland doesn't represent a good place to invest. And you only need to see here, 15 of the 50 properties in the Fast 50 this year are in Queensland. So again, it's going to come to the budget. Again, it's going to come down to where you are in your investment journey. Again, it's going to come down to your appetite for risk. Again, it's going to come down to what sort of equity you have that you can extract from current properties, or whether you're new to investing. So these are all the type of discussions and decisions you need to be making in lockstep with your advisors. But let's look at some of the numbers here, Paul. At the more affordable end, who would have went like 10 years ago, these numbers, right? At the most affordable end, 430 grand will get you into Park Avenue, which I don't even know where that is.
I
Park
can't
Avenue,
say I do either. 4701
in Queensland. It's just the statistical division is Fitzroy.
Okay, let me bring that up.
It's regional, so you can get a sense for geography. Now, to get a sense for geography, let's remember, right? Queensland's a pretty big joint.
Massive.
It is closer. Melbourne is closer. Melbourne is closer to Brisbane than what Cairns is, right?
Yep.
And Townsville and those sort of places. It's a big old joint, Queensland. So got to be conscious of the size of it. You put Queensland into Europe, it's larger than a lot of the countries there, right? Like, it's a big old place. And I'm sure Queenslanders would like to have their own.
So apologies for those Queenslanders who Park Avenue didn't really give us too much context, but it's adjacent to Rockhampton City. So
Well, there you go.
There you go.
Not far away. So Park Avenue, 430 grand, recommended by quite a few people. 135 properties sold, not a small market.
Yep.
Median quarterly growth, 3.6. Average annual growth, 6.3. 12-month growth, 29.1%.
Yep.
On a 5.8% rental yield.
And so what's the current average price in that market? 430. 430.
He's got his pocket computer out here.
And I guess this is what I want to give some context, because if you say the 10-year, what did you say, the average 10-year was 6 points?
Average annual 6.3.
6.3. And this is it. If it was on that same trajectory, Phil, for the next 10 years, and you bought that property today at $430,000 at 6.3% average annual compounded returns, this is what's got to give you some guidance to say, is that property going to be worth $800,000 in 10 years' time? And I'm not saying it's not going to be, but that is what it's suggesting, that if it stayed on exactly the same cadence that it has in the previous 10 years, you are going to have a $792,000 property in 10 years' time.
But you just go, that's just not possible. When's it going to place in, I'm sure Park Avenue is a lovely place. I've got no idea where it is, near Rockhampton. But I'm sure you're sitting there going, no way.
Yeah.
How's it going to be worth it? I'm going to go to Park Avenue.
Okay.
I want to go up there. I haven't been to many regional Queensland places because it's so bloody far away. It's a long way. What little capital growth calculator you use there?
I've got a few different ones. This one is the government MoneySmart, moneysmart.gov.au. If you want to get onto some compounding boffin numbers, you can fiddle with it to the cars.
I always end up there and some other places when I get annoyed with property and frustrated, and I sit there and I just go, I've got to recalibrate, and I'll put some properties in there and I go, okay, what's that going to look like in 10 years? I go, I can handle this. I can deal with these problems, But to give some sense for it, you sit there and just go, no way, it's going to be double.
And 10 years ago, I can guarantee you people were sitting in Park Avenue with a $200,000 property that they purchased, thinking there's no way this thing's going to be worth 400 grand in 10 years, and yet here we are.
So another suburb here, Koongal. I think that must be right next to Park Avenue.
Okay.
So obviously some trends there. It's the same postcode, but I imagine a postcode in Queensland probably covers the size of Switzerland.
It certainly could.
Have a look at that. 445K, 124 property sold. So it's a market that's moving, right? And how much of that is investor activity versus owner occupier? I don't know. I don't see. I'm completely like Koongal, and it will be in a report here, right? And I could probably look it up really quickly because it's all in alphabetical order. Here we go, Halls, Happy Valley. Here we go. A quiet suburb of Rockhampton offers a mix of older homes and new developments at competitive prices. The suburbs home to families, retirees and workers in agriculture and resources. with easy access to the schools, shopping precincts, and outdoor recreational areas. Koongal provides a balanced lifestyle as Rockhampton continues to expand. The suburbs' availability and proximity to employment hubs make it an attractive choice for homeowners and investors seeking steady rental returns. So it just sounds like anywhere Australia, nice town, probably has all those very important amenities that we spoke about on episode number 1, with a rich shopping district with many different shops. But again, go and check it out. Koongal, it's again very similar numbers, 5.7% median quarterly, so it's moving. 6% average annual, 34% growth in the last 12 months, which is one of the outperformers of this particular cohort of suburbs, 5.6%. We've got another suburb here, Mackay, North Queensland, obviously, 445K. Again, it's moving very similar numbers, 25% growth over the last 12 months. Vincent in Queensland, again, that's northern, 445, very consistent numbers. But what you have there is the outperformer, 41.3%, 12-month growth. Like, that's not bad going.
Oh, it's sensational going.
Yeah.
If you can grab it while the grabbing's good and probably access it is probably the hard part to figure out. And it probably leads to one of those comments I made at the start of the podcast, Phil, is that these markets are showing some great signs of growth. Now, it's probably something that we spoke about on the podcast we did on the WA market, where I alluded to an example of a client who has a property that's deemed to be high risk from a banking sector, and they can't access the equity in that property, and the bank's not now taking into account the rent that's coming from it because it's deemed to be category 3 or high risk and associated with mining activity. I'm not suggest that Mackay or Rockhampton themselves are necessarily in that category, but they're certainly not in the same categorisation from a risk standpoint as major metro markets. And when you look at the population, Mackay's circa 140,000 and Rockhampton's about 80-odd thousand. These aren't big markets when you compare them to Perth Metro, 2.5 million. When you compare them to Brisbane Metro, 2.8, 2.9 million. The robustness of these markets starts to become where your questions start to lie, where they will be more volatile. But if you can get it while the getting's good, great. But just be prepared to hold for a longer period of time as and when it starts to go through that sideways movement.
Yeah, and another regional area here, regional capital, capital of Northern Queensland, they call it Townsville. Interesting one. A lot of our experts have recommended Townsville. Numbers, 4.65% median quarterly growth, 4.4% average annual growth. But interestingly, 12-month growth is 7.75%.
Yeah. So
that's got the trappings of what you would expect
Top
to see in more metro markets. It's not growing at a rapid rate, but it's stable and steady. Now, how big can Townsville go? I know Philip Thompson, MP, who I know pretty well, who's the member up there. He thinks it's a great place to live.
Of course he does.
But it's a very diversified economy. It's the biggest garrison town in Australia, and will continue to do. It's highly intrinsically connected with the defence sector, and there's a lot of activity up there right now. There's a lot of buyers agents in Townsville. Whether or not that growth's starting to wane, those numbers are looking very different to some of the other suburbs that is indicated there. But the reason why Townsville is so well represented is because a lot of our experts have actually said it's a good place to be. So
slightly larger market. I mean, one of the more larger markets, regional markets across Australia, over 200,000 population. So it's starting to move into that less volatile economy, sort of single, multi. It's certainly got a robust baseline, and it does have some government-backed sectors as well when it comes to who lives there, what do they do, how do they get paid, and what's the volatility and how that can change over time.
Like a cyclone up there, though.
They don't mind a bit of rain. I'll give you that much. Fun fact, one of our buyer's agents, senior buyer's agent, Lynn Lindley, who's also a contributor to the report, is actually born and bred Townsvillian.
Oh, is she?
The going terminology in our office is, Lena, what was it like to live in Townsville? She said, Paul, and she will say to you, Philip, the main thing that I heard from my mum, my dad, and everyone else who could speak to me at an age where I could choose what I wanted to do in life was deemed to be get out of Townsville.
I would say that.
I would say, I reckon, would not be happy with that at all.
You can't call him Tomo. His name is Philip Thompson, MP. You can call him that. He's a big advocate of the veterans community. He's a veteran himself, injured in Afghanistan. Great contributor to the opposition now.
Did I speak ill of Tomo?
Well, don't call him that. But I've said I've told him I'm going to come up to Townsville. I want to go and have a look. See what's going on in Townsville. But so regional markets have performed well up in Queensland as a sort of sense for the Fast 50. 3-4 suburbs in Brizzy, Paul. So the shine has come off Brisbane, I think, in many ways. Through the point of where you're going to deploy your dough to get the biggest bang for your buck. That's okay. Fortunately, I've been in there for 10 years, so I've had good times.
Listen to you.
Good
crowing.
times.
Far
Good
out.
times. Again, it's got to show to a lot of people, and I'm happy to disclose it. I don't know a lot about property. I know heaps of people that know a lot about property, so I turn to them for my insights. Some of these places, I'm not too sure where they are. I'm saying them properly. Bundamba.
Exactly. Twang it out. It's in the Ipswich corridor.
That's normally what I say.
Yeah.
I resort to my real voice, not my radio voice, but I got to say things. 605K. Quite a few recommendations there. We're also in North Ipswich.
Yep.
I've been to Ipswich. Ipswich is a big place.
Bundamba's in Ipswich.
Yeah.
Enormous place.
Lots
Top
of different
three
bits.
local government area sizes in Australia.
Is it really?
As far as the LGA size is concerned.
Lots of really nice old town there.
It's actually a cracking place.
Yeah.
And I've spent a lot of time there buying a lot of property there back in the day. I own a lot of property
Really
there.
good pub. I remember
There's a few good ones
I know,
there.
but on that little high street,
in actual Ipswich.
In Ipswich,
yeah.
yeah.
Ipswich town itself is
You go in there and go, yeah, I'm in Queensland
yeah,
here.
yeah, absolutely.
Yeah.
You feel it.
Had a shot and it looks like
Zambuca.
yeah, mate. There's a couple of 4X, a couple of tinnies of 4X. Love it. Do you know what we should be doing as part of this report? We should be matching. Just have a matching beer with every suburb, right? Like a fine dining.
All these opportunities.
Like Townsville should be 4X. Bundaberg should be like
Bundy
rum. I'm sure. Maybe we can do a special
EU export for over in WA.
Yeah, maybe we could do a special report where we match the beer for the investments. Oh God, South Ripley. 765K
it's down the
median.
Springfield region there, more newer corridor.
Springfield's one of the largest, if not the largest, planned developments in
Master
Australia.
plan developments, yeah, it has been over the last 20 years. Absolutely has
It's
been.
like
yeah.
I've never been there.
Oh, really?
No.
I've spent
Got
a fair
property
bit of
there,
time out
never been there.
Yeah, no,
Yeah,
good. And that's
never
it.
been there.
Hint, people, don't freak out too much if you don't get to see it or feel it. I'm sure it's done well for you, Philip.
Yeah, can't complain.
I'm not complaining.
I can't complain. And Cooperoo.
Yep.
4145.
Bit more of a decent suburb.
$1.50 and a half to invest there. $1.5 million. 192 sales. So large transactional activities. Median quarter growth. We're in the negatives. 4.5%.
Yeah.
Average annual 8. 12-month growth negative 0.8.
The last 12 months.
Yeah.
Yes.
Yeah.
Yes.
Maybe. Yeah, that's at the other end of things. Like maybe that's really early.
But Phil, what was the average annual over the last 10 years for Cooperoo as an example?
8.1.
Yeah, I was going to say, sure, it's been excellent. 8.1, when you apply that, I mean, that's a more than doubling in 10 years' time at 8.1. So, and I dare say it has more than doubled in the last 10 years. It certainly has. And the reality is they're the markets which the common consensus and the data will support this. And we've talked about this on the Pure Property Investment Show a few times, Phil, offline, is that when it comes down to it, you'll see the theme here. Average annual, bottom 25 percentile is the most highly represented because that is the market that's seeing the most amount of growth. So if you're looking at how to apply this and where the best on average growth is going to come, keep that in mind, is that the higher price markets aren't performing as good nationally as the lower priced and also that bottom edge of the middle price markets as well.
Good insights there. Remember, go and chat to your advisors in relation to any of these investment decision makings. Team over at Pure Property, always happy to have a chat with you.
PurePropertyInvestment.com, 1300 985428.
Cool. And again, to the top end of this discussion around sort of some of these complicated terms, go and check out smartpropertyinvestment.com.au. You're going to have all the information you need there, and any questions as well, you can just send an email through. We'll make sure we get that answered. We'll be back with our special installment of the Fast 50, episode number 4, coming to you shortly. We're going to be talking about the debutante, the new to the ball, Victoria. Good representation in the report this year. Make sure you tune in. Remember, go and download the report, smartpropertyinvestment.com.au if you haven't yet done so. We'll be back shortly. Until then, bye-bye.